Welcome to the Market Timing Report Brief, 5th of August 2020. We're going to be looking at gold and the euro. First of all, mandatory disclaimer, this is research information for educational purposes only. Please pause the video and read this disclaimer before continuing. Thank you. So the story so far was we were reporting in the previous editions of the Market Timing Report. I was drawing your attention to this significant cycle that was coming in for the third week of July. It was an important cycle. A lot of our proprietary cycles were coming together for this time period. And what happened, it turned out to be an acceleration. So 90% of the time it's a reversal, 10% of the time it's an acceleration. And we saw an acceleration on this occasion. And it's a very strong acceleration. Key point as shown in the latest report is coming up towards the back end of September. That's an important point to look for. And we're going to just delve a little deeper and see why that might be the case. Now, let's take a look at seasonality. This is in our platform. The annual normal seasonality goes back to 1975, the average past the market. And we also have our proprietary weighted seasonality. And what we see is from the beginning of August, they both take off. They are both very bullish, at least into the beginning of September. And our proprietary seasonality suggests we should be looking for a secondary top, a potential secondary top, or a major top around about the second to third week. So that's an important point. That's tying in with some of the weekly cycles we're showing in the report. Note also that the cycles then diverge towards the back end. So the first clear point shows a run up towards the back end of August into the beginning of September. Then we get a little bit of divergence and a possible further continuation. Remember our profit timing oracle signals, which are those histograms that I've shown you, are very powerful and they relate to the DNA of the market. And as you saw, the time cycle we said for August turned out to be a significant acceleration point rather than a reversal. So we're looking for another similar DNA point towards the back end of September. Now let's take a look at the activity shown in the commitment of traders data. What we've seen is the last week has seen actually a decline in shorts amongst the commercial traders, and if we bring the longs in, there's been a slight increase there as well, and the net positions for the commercial positions has increased. So that suggests that they're now starting to buy gold, and that one of the implications of that potentially is that they are now considering that prices could be going a lot higher. So say they're buying gold in relation to what they've been doing previously. So that's the important point. And then the next one to look at is the non-commercials or the trend followers who usually follow a trend. They have started offloading their long positions. So let's just take a look at that, and we can see that they've reduced their positions over the last couple of weeks. So they're starting to think that a top is coming in, and also they've increased their shorts. So this is kind of like a contrary indication. So this suggests that the trend followers, hedge funds, think there's a top coming in right now, but the smart money suggests that we might be going up a bit further. But the key point is really the fact that the smart money, the commercials, have actually started buying it a little bit compared to the last few weeks. So that suggests that there could be a lot more legs in this move up. And as we look at the chart for long-term gold, this is a super long-term pitchfork going all the way back to 1976 with the 1980 high, and the low here in 2001 as the main parameters that caught the exact high there. You can see that this could potentially take us initially up to this level. I don't know if it's even going to stop there. There is another level that we put in the latest edition of the Market Timing Report, which is a gold special. But this here is quite a significant level. And what I've now done is I've added the halfway lines in just to show you that you can see how this has worked as support and resistance previously as well. So these are very critical points that are coming in. But that would suggest that if we look a little bit further down the road, I think we could easily get to 2,200, 2,250 quite quickly. And there is a bigger target, again, as I say, that we're mentioning in the report. In fact, this month's Market Timing Report is a special on gold, and also in there I explain how this is potentially linked to a currency crisis coming up within the next few months. So you can read about it there. Just another point to point out for those of you that have been following this work. I've been talking about the first week of August being the 30-year anniversary of the invasion of Kuwait, and some focus on the Middle East and geopolitical tension. I've been mentioning it over the last 6 months, and in fact the year ahead report. And very sadly, we did see this massive explosion in Beirut yesterday, which is actually within 2 days of the 30-year anniversary. So whilst it's not a warlike event, it certainly ties in with this cycle of creating destruction in the Middle East. Is pretty much within 2 days of the exact 30-year anniversary. Now let's take a look at the EURUSD. We've got this nice impulsive move coming up. We've taken this significant high out here and we're moving up. Every time we get to a Fibonacci retracement level, so taking this high and this low, what we're noticing here is that we do tend to exceed it by a little bit, and it just went through the 50% there like a hot knife through butter. So it went straight through it, no pause, and we've gone up here, we've pulled back a little bit. So this is kind of pretty interesting. This would suggest that we've also broken out here. So is this a false breakout, or are we going to see something a bit more? Let's take a look at the bigger picture. And here is the bigger picture. This is a monthly chart of the euro. Now, euro futures started trading here in 1998, 99, round about here. So this is the true euro per se. That's when the currency was created. And before that, we have a reconstituted euro, which is based on things like the ECU, for those of you who studied it. The long and short of it is that this trend line here is a very significant trend line. And we can use that, and taking it off here, it brought in this particular channel here, helped us, it ties in with this here, and the midpoints as well are very accurate. So we know this is a very strong level. So for followers of the report, we've been talking about this for a long time. It has been coming down here, and we did feel that if this failed, this would be quite significant. I mean, there's a slight overshoot down there, but any big collapse of that would be quite serious. And so therefore the odds were favouring a move to the upside. And now the reason I want to put this report out is because we're now hitting this point here, which is a make or break line. So this is the first key point, or rather the next key point to note, is that we are actually at this point here. And as I showed you, we're also at that Fibonacci level. And that's there at the Fibonacci level as a quick reminder. So everybody's quite bullish at the moment looking at that. Now, well, let's go into our platform and see what's going on. First point to note is that if we look at the seasonality for the euro, which goes all the way back to 1999, we have, first of all, our seasonality based just on regular seasonality with the blue line. And then we have our own proprietary seasonality with the gold line, and we look to see for the areas where these overlap to get a really clear seasonal run. And what we do see is the first part of August tends to get quite bearish. A regular seasonality will take it all the way down to there, and certainly if we then re-look at seasonality from mid-August, again it gets bearish. So these seasonal clues are suggesting that we might see a down move in the euro. Now let's leave the seasonality part of our platform and go into the commitment of traders extremes, and we see something incredibly interesting happening. Taking a look at the euro here, we are seeing all-time highs in commercial shorting. Okay, now this is all-time high in commercial shorting. We'll go closer into this minute. Also, they are net all-time low. We're also seeing all-time highs in non-commercial net positions. Non-reportables are all-time high. This is immediately alerting us to a significant imbalance, and this is the sort of things we see closer to extremes and potential reversals, close to very large, close to extreme highs and lows. And what we do also see, especially in uptrends, is we've got an all-time high in open interest. Everybody's interested in the euro. Everybody's piling in. So this is a very big warning that we're getting here from our platform here. So this is the extreme section of the COT data, commitment of traders data, alerting us to a possible extreme coming in the euro. We are now in the commitment of traders grid, the full platform, and if we look at the euro, first of all, look at this. We've got an alert here. We've got a percentage flashing here. That means there has been a significant weekly change from the data from last week. And what we've got here, this will flash, as indeed you'll see there are other markets flashing at the minute. But let's just concentrate on the euro. 19% increase in longs amongst the non-commercials. Now, if you're familiar with the COT data and how to use it, the non-commercials are basically the trend followers. They are now massively long. They think they've got a confirmation of trend to the upside. So this is a significant indicator. In fact, this isn't just a 12-month high. This is the highest high I think we've seen in at least the last 4 years in the euro. Let's just dive a bit deeper. Okay, so here's that very sharp move. Here's the non-commercials. Remember, these are the trend followers. For those of you that have done the course on this that we provide, they have made this massive move up. This is the biggest move up in terms of sort of velocity for over 4 years. So that is pretty significant, and it could go a bit higher yet, but this is the sort of level of activity we get as we approach highs. And if we just scan all the way back there on the euro data, here's another spike there that we got. You see the level of trading is much higher these days of the currency, but you can see that there coincided with the exact high. And this here got towards the end of that run for a high, and then we went into a sideways spell there. So this is important. This is a very important indicator that's playing out. So when we zoom back in, you can see that we've had this move from 110 all the way up pretty close to 120. So this, this massive move up there. So this is the sort of thing that we see, as we approach exhaustion of a big move. As I said, everybody piles in. Now, let's take a look at the non-reportables here. So the small traders, they have increased their long positions massively, have all piled in, net long. And the commercials, this is fascinating. For the first time ever, they're more than 500,000 contracts. Look at this, this is right, a total extreme. So if we just do that, we look at this, we have never seen this level of commercial shorting ever. So this is pretty fascinating. It's indicative of a real imbalance in the euro. And so we'd use the dates in the report to look for these reversals. They can take a few days, a few weeks to play out. So we'll keep an eye on that. And then finally, the last thing is our COT index, the commercial index here has hit zero. So we always want to keep an eye on when it does that. It has to be read in conjunction with the other bits and pieces that I've shown you about. So in this case, when we look over here, when it hit zero, we got this top within a couple of weeks. Here we did get to zero, but we needed to time. The only way we got this one was by using our timing signal. So that is what we need to use the report for. So that there is showing a very big extreme, indicative of a potential top in the making, especially with that massive rise in open interest. It's got all the behavioral patterns of a significant turn coming up very shortly. So that's the euro. There's a couple of other areas flashing here. We're getting some indicators and warnings in silver and also wheat. This platform is on special for 48 hours more. Come and join us. We'd love to have you on board. Full details there at markettimingreport.com, and take a look at the professional traders platform. So this is available. We are heavily discounting it just for 2 more days. I hope you find this video report to be useful, both on the euro and on gold. And we look forward to you joining us at the Market Timing Report. Thank you.